GM Legends, it's Kate, your fave Satoshi sister. Together with my sister Joanna, we will present you with the hottest crypto news from the week. But before we start, remember to subscribe to our channel, leave a thumb up, and watch from the beginning to the end of the video. Let's get started. Tomorrow, it's halving time. Brace yourselves for the big crypto event. Yep, it's that moment when Bitcoin does its 4-year dance and slashes miner rewards in half. But hey, you're already clued in on that, so what's next? What's the post-halving scoop for the crypto realm? According to the Crypto Cycle's 101 playbook, the halving is like the ultimate plot twist. Not only does it shrink the stash of freshly mined bitcoins, but it also triggers a psychological roller coaster for both newbies and seasoned holders alike. As history has shown, post-halving is often when BTC goes full throttle, big money starts flooding in, and the project pipeline expands faster than Elon's tweets. The entire market's been eyeing this supply squeeze as the perfect launchpad for their hype trains and product launches. The run-up to halving, as per tradition, was a rough patch. Think bears ruling the roost. We're talking fatigue, dips, dwindling interest, and global issues reigning on the financial parade. The East-West showdown and the brewing tension between Russia and Ukraine didn't exactly do the market any favors, but this time around, it's a plot twist even Hollywood would envy. We hit new ATHs just before the halving. Talk about drama. The altcoin rally, led by the mighty ETH, was like rocket fuel for the market, chugging along for over 2 months straight, with human greed reaching epic proportions. A correction was looming large, and it finally hit. But hey, it was all thanks to the influx of fresh capital and positive ETF vibes. And let's not forget today's market mood. It's a combo of waning interest and crypto fatigue. Cue the graphs and stats. We're seeing a dip in Web3 app downloads, social media chatter, video views, and Reddit rants. So what's the takeaway? Hold on to your hats and weather the storm. No need to panic or rush into impulsive moves. If you're all about riding the cyclical wave, the months post-halving are your playground. The last 3 halvings showed us the market's potential post-event, despite the doom and gloom. From ETF buzz to blockchain adoption, there's a ton of value waiting to be unlocked in the crypto universe. So buckle up. It might be a wild ride, but the trajectory, straight to the moon.
In our previous brief, we touched on the Middle East conflict's narrative and its impact on financial markets, or lack thereof. While traditional markets barely flinched, the crypto realm was on high alert. Investors hit the panic button, sending Bitcoin prices on a roller coaster ride down to around 61,000 per pop. Come Monday, and it was like deja vu. BTC bounced back to its pre-chaos levels, sticking to its sideways dance. Gold was the dark horse of the story, gaining a solid 22% since February. The moral of the story? These geopolitical showdowns are market manipulation goldmines, especially in crypto. Stay cool, calm, and collected. Panic selling won't do you any favors.
As the Satoshi sisters famously quip, buy when the cannons roar, it's no wonder we've honed in on constructing a cryptocurrency portfolio primed for growth. We've meticulously crafted our wallet, segmenting it into several categories: safe bets, high potential picks, and ventures with a higher risk profile, all designed with one goal in mind: maximizing returns while minimizing risk. Curious about the specific assets we're holding and the rationale behind each acquisition? Just drop your email in the form and subscribe to our channel to stay in the loop.
Bitfinex Securities, blazing trails as the premier licensed digital asset firm in El Salvador, has just dropped a bombshell: the issuance of tokenized debt to bankroll the construction of the swanky Hampton by Hilton Hotel at the international airport. Dubbed HILSV, these tokens will soon hit the trading floor, paired against USD and Tether USDT on the Liquid network, a sidechain of Bitcoin. The objective? Rake in a cool $6.25 million, with a minimum investment pegged at $1,000 and a juicy 10% annual coupon over a 5-year span. The project encompasses a sprawling 4,044 square meter edifice boasting 80 rooms, complete with a splashy pool and retail spaces. Spearheaded by Inversiones La Guardia S.A. de CV, Bitfinex Securities, birthed in early 2024, marks the vanguard of El Salvador's digital asset landscape.
In a groundbreaking move, regulatory bodies in Hong Kong have greenlit the launch of spot Bitcoin and Ether exchange-traded funds, ETFs, opening the floodgates for official investment vehicles in these premier assets. This bombshell announcement, hot on the heels of a tumultuous weekend in the crypto realm, signals a seismic shift in China's stance on digital currencies. 3 ETF juggernauts have secured the stamp of approval from the Hong Kong Securities and Futures Commission, SFC. China AMC in particular is flexing its muscles, boasting the regulatory nod to offer virtual asset management services and actively plunging resources into crafting ETF funds for spot BTC and ETFs. The winds of change are palpable in China's crypto narrative. In 2021, the dragon clamped down hard on crypto trading, wielding its regulatory hammer in response to widespread market turbulence. Fast forward to today, and Hong Kong is gingerly positioning itself as a regulated crypto hub, aiming to lock horns with titans like Dubai and Singapore. Alas, there's still no concrete timeline on when China can hop aboard the crypto train. The same seismic shift could echo stateside. With the maiden approvals for spot BTC trading freshly inked in the US, China could play kingmaker in greenlighting Ethereum ETFs across the Pacific. It's all adding fuel to the fire of crypto adoption, paving the way for easier access beyond the confines of Web3.
The buzz around Layer 2 solutions is reaching a fever pitch, all riding on Ethereum's coattails. But let's call a spade a spade. The surge owes much to Ethereum's sky-high gas fees and a tidal wave of capital seeking greener pastures. But amidst the gold rush, a cautionary tale unfolds. Enter Starknet. Touted as a game changer for the L2 ecosystem, it's fallen short of the hype, its meteoric rise. Fueled less by utility than by speculators and airdrop chasers, artificially inflating traffic and transaction volumes. But the party came crashing down post-airdrop, laying bare the stark reality of user engagement. Turns out the emperor had no clothes. Lackluster interest, courtesy of scant opportunities, a dearth of DeFi communities, and plain old user preference spells trouble for Starknet. Is it destined for a slow blockchain death? Time will tell as the market pivots and capital seeks new horizons.
The Securities and Exchange Commission, SEC, has fired a shot across UNISWAP's bow, hinting at legal action over alleged unregistered security offerings or failure to register as a broker or exchange. The once untamed frontier of decentralized finance, facilitating trillions in transactions, now finds itself in regulators' crosshairs. Uniswap Labs, the puppeteer behind the curtain, is gearing up for battle, invoking the sacred mantras of decentralization and open source code to ward off the specter of traditional securities laws. But the damage is done. Token prices plunge. Investors quiver in fear of platform collapse and data leaks. Since March's dawn, token values have plummeted by over 60%. The current price hovering around the $7 mark. Will regulatory crackdowns smother decentralization's flame or stoke its coals, safeguarding future investors?
Hold on to your hats. We've got a blockbuster in the making. Our latest video dishes the dirt on a project that's giving the big boys a run for their money, nipping at the heels of none other than Celeste. But wait, there's more. We're walking you through step by step on snagging those sweet, sweet tokens in the next airdrop. The film's dropping soon on our channel, so keep your eyes peeled. And don't forget to swing by our Twitter. We're laying out the roadmap one tweet at a time. According to the Gospel of Gate.io's How to Snag ZRO Tokens from LayerZero guide, the token generation event, TGE, could be knocking on our door any minute now. Rumor has it this year might just see ZRO's grand debut. With the project's wheels turning and tech gaining traction, it's poised to deliver a sucker punch to the blockchain world. Since rolling out their tech, the floodgates have opened, with eager enthusiasts farming the protocol and bridging tokens left and right through their Stargate flagship app. Will their platform prove a treasure trove of ZRO tokens for the taking?
Time for a gut check on the market front. As we speak, the market cap's clocking in at a cool $14 trillion, down about 19% in recent days. Classic case of pre-halving jitters, if you ask us. Textbook cyclical correction right on cue. BTC's riding the waves, bobbing between $62,000 and $63,000 after taking a dip to the $61,000 range. Critical support zones. Keep your eyes peeled on $61,500 and $59,000. Cracking these bad boys open could spell more trouble. Trading volumes circling back to base camp, with spikes mainly tied to headline-grabbing events like China ETF nods or Middle Eastern drama. BTC's calling the shots, commanding over 55% of the pie and beefing up its share by a solid 7% since April kicked off. Altcoins, on the other hand, are singing the blues. Most are bleeding out, losing between 30% and 50% of their value in the past month alone, with no bottom in sight. Every passing day sees capital trickle away, leaving us average Joe scrambling to catch a break. Patience is key. When the tides turn and fresh capital floods in, it'll be prime time to rejoin the fray. Hold tight if you're still in altcoins. Selling now could mean kissing your gains goodbye. That's all for today. Let us know if you like this video and stay Satoshi. Don't forget to subscribe to our channel and like this video.